Okay, guys, let's see how we trade the opening range on the S&P and incorporating the fair value gap with it because it works really, really well with our software. So this video is going to be how to trade the 5-minute opening range on the ES with a fair value gap entry. Fair value. All right, so this was our buy signal in our software. We had a yellow trigger entry right here, and this was on our HVA. So this will coincide or actually give you confluence on some of our entries if you understand how this works. So this video is going to be how we set this up, what the market likes to do to sweep liquidity on a daily basis. But we're going to concentrate this just on the New York Open or with news. I'm going to show you how we do this. And I put this up in the members room before this even came down, which I'll go over in a second. After the first 5 minutes of trading, I marked this up, got on the microphone, and said this would be the area to look for the bounce. I'm going to show you how I did it. All right, so this is CPI today. CPI, you can see a big candle. I'm using a standard 1 minute chart. 1 minute chart. Now, you can find fair value gaps on the 15-minute chart also, off the 15-minute opening range. I did this off of a 1 minute chart because it coincides great with our software when they find these liquidity grab zones. So what does the market like to do? The market likes to come down and sweep liquidity, right? Because it comes within balance and it gets imbalance, and it goes back into balance and it comes back imbalance. So what we try to do, the market got imbalanced today on this fair value gap play, and it came right down to our market profile and pretty much stopped within a couple ticks, if not right on our market profile, and shot back up. Well, I'm going to show you just by looking at these candles by themselves why, when it came down to HVA, and why we got a yellow trigger zone entry from our algorithm, why it's a really good spot to get long the market. And who knows, this market may stay up all day with the news. CPI, the numbers came in and showed inflation is cooling. Since inflation is cooling, that is a great environment to low interest rates. Lowering interest rates is a great environment for the stock market. So that being said, that's why you have this big giant green candle. CPI came in favorable here at 8:30 this morning. What you want to do is how to trade the 5-minute opening range first. Let's go over that. So all you do is look, this is a 1 minute candle. The New York opens up Eastern Standard Time at 9:30 Eastern. And you wait for the first 5-minute candles. You see there's 9:30, 31, 32, 33, 34. All right, so wait. 1, 2, 3, 4, 5. There you go. So there's the five candles. 1, 2, 3, 4, 5 candles. This is the high of the candle of the wick from 9:30 to 9:35, and this is the low. So that is your 5-minute opening range. Now what we can do is from the 5-minute opening range, we can find out where there's energy in the market in the direction of the breakout of the opening range. Now, I like to add the fair value gap in. Everybody knows how to do an opening range. That's pretty easy, but a lot of the opening ranges tend to fail, and you don't know if you have a good spot to where an entry would be. So I like to find out where our zones, our liquidity grab zones are in conjunction with the fair value gap right after the New York opens up on the S&P. The first criteria that you have to have when you're looking for a fair value gap, or where they're trying to, a fair value gap is they're sweeping liquidity is what they're doing. They're taking the rolling position traders out of the market. That's why our zones work so well. If you look at all our videos, it's based upon sweeping liquidity, like fair value gaps. That's what it's exactly based upon. Where the market stays orderly, sweeps liquidity out of the rolling position, counter trend traders, or the traders are on the wrong side of the market, and it goes in the other direction. So the first thing we do, we have to break structure. You have to break market structure. That's the first thing you do if you're looking for a 5-minute opening range trade and determining the fair value gap. And I did the same thing yesterday, and I'll show you that trade. That trade took off really nice for us, and I went over that yesterday. So first, it's got to break structure. If you're trying to find fair value area gap levels using the opening 5-minute opening range, it's got to break structure. All right. So here's your big 5-minute candle. 1-minute candle. You can see it close way above the opening range. Here's your opening range, 5-minute opening range, the high and the low of the first 5 minutes on a 1-minute bar. So it's got to break structure. Well, what structure? Structure is just previous lows and highs. Did that break the structure? Yes. So you can tell this broke structure. This is so easy to do. Once you do this, it works really good on cherry picking where our liquidity grab zones are. So that broke structure. That's the breakout. So when I got on the microphone with the members today and did the video for members outside of the trading room, is that the price was right around this level. And I drew this in. I drew this box in. How do I draw the box in? How do you draw a fair value gap in? I said if we come down and we get inside of this fair value gap, the professionals have now swept liquidity and they're looking to bring it higher. Here, I drew this in exactly here. I said look for it to come down the fair value gap and then go up. It got close to it here, did not do it, came up, did a double top, came right back down to my fair value gap. This is where our yellow trigger entry was, or this is where our zones were also, and it shot up from fair value from the 24 level to 35. It ran over 11 S&P points. So here, this is how you can project ahead of time though. So the one is breaking structure. 2, you got to find the fair value gap. Fair value gap. Find fair value level. Find fair value gap. This is a 3-candle sequence. A fair value gap is a 3-candle sequence. You guys are going to be stalking these. I like to look at these when they line up, like I said, with our zones, because I know that those are high probability trades because they're trying to grab liquidity. That's what the market likes to do. Always tries to find balance in liquidity. Tries to sweep liquidity. Okay, so find the 3-candle balancing after you break structure. Old swing high or low. Okay. Very simple. Easy to do. So you break structure. Structure must be broke. Old swing high or swing low, right? That's this number 1. So how we find the fair value is we look at a 3-candle sequence. So here was our candle that broke out above the 5-minute opening range. There's the high of the range, low of the range. There is our candle. So what I'll do is I'll look at the mother candle. The mother candle is a candle before the breakout. And it can be a couple candles afterwards, but this is called the mother candle. And you want to look for 3-candle sequence inside of that. You take the high, if you're buying, you take the high of the wick and the low of the wick in a 3-candle sequence from your breakout candle. That will tell you your fair value gap. So you take the low and the high, and this I drew this in before it came up. I drew it in right here at this circle. None of this was here, so this wasn't even on the chart when I did this morning for you guys. None of this was even here. So we were just looking at price action up here at this level, and I drew this in. So I drew it in. That's why it's very leading. I drew the high of this wick and the low of the wick. That's called a gap. When there's a gap in between that 3-candle sequence of the wicks, that's the gap. And that creates a fair value gap. So I drew that in. I drew this fair value gap in before it even came down to it. Okay? So this price stuff wasn't even here. So what happens is when the market goes up, it wants to try to sweep liquidity from all these traders, bring it back down inside of the fair value gap, and then bring it back up. It tried to do it there, didn't do it. Then it got inside of it. Consequently, this is exactly when my zones were inside my zones, and we got a yellow trigger inside of here. Here's your highest probability trade. Because I just got back inside of the fair value gap. Right? And we had a nice buy signal that brought us up from 25 3/4 to 35 1/2, over 10 S&P points on my projected buy signal. I projected this way before it even came up with you guys in the room. Okay? So that's how you do it. But you got to replay the video, find structure. Now, we just had a fair value gap here between these candles. Look, it's a 3-candle sequence, right? And what I like to do is I like to see when the candles are big candle. Right? Here's a big short candle. So I can tell right now there's a fair value area gap from the low of this wick right there. So if this holds below this level and I get a pulling candle and I start getting below the 5-minute opening range, then you're going to have a possible sell fair value gap, right? Vice versa, if it's going to hold above our opening range, the 5-minute opening range, because it likes to retest this. I'll show you how it likes to retest it. See, this is not in this 3-candle sequence, it's not a fair value gap, right? Why? Because the wick here, this wick is into the wick. There's no gap in between the wicks on a 3-candle sequence. This is a gap. So we're going to see if they're going to roll this over in this fair value gap area, or they're going to continue it up. That's a fair value area gap sell right now. It's going on right now. So if we get through this market's going to continue. But if not, we could roll right back over, get inside of this 5-minute opening range, and come back down. But I want to show you how these work on the fair value gaps on the first one with energy. That was yesterday. So yesterday, this is the 5-minute opening range. I drew the fair value gap in, and not only did it take the first one, it shot up with energy 46.5 to 66, and it ran up 20 S&P points from the retest on the opening range fair value gap. Look what it did on the retest. These are good for the entire session, especially the morning. If you're doing a morning session, retested it and it shot up from 52 to 86. So that's how we trade their fair value gaps with the opening range. The cool thing about it is when you come down to it, this was our fair value gap buy. This gave us confluence. It stopped right on HVA. Gave us a nice buy signal with our algo at the same time. Okay, Gerald, go and shut that off. That's how we do it. I'll be doing that with you guys. I'll show you guys how to do it. When I get in here in the week, but that's how you trade. So the shut off, Gerald. So how to trade the 5-minute opening range with a fair value gap. Liquidity grab entry. That's all they're doing. They're sweeping liquidity grabs. They're sweeping liquidity grabs. That's all they're doing. Now what they're trying to do is they're trying to sell the market off based upon that sell liquidity right here. Look, that's all the market tries to do. It just keeps grabbing liquidity. Look at that 3-sequence candle. 1, 2, 3 sequence. Look at the low of that wick to the high of that wick. That's a fair value area gap. What do? They brought it down inside of it, grabbed liquidity. Now they're bringing it right back down inside of it for the short. And so it's a real neat way to confirm with candles. The easiest way to do it is to find out in a 3 candle sequence where your gaps are. So we can do, if the market ever goes back up today, I can tell you where she's probably going to stop. If I look at a 3 candle sequence, see this big candle? There's a mother candle. Here's your fair value area gap. There's a big gap in between the wicks. This is resistance for the morning. That's a fair value gap sell. That is resistance right there, right around 32 to 33. If it comes up, that's going to be major resistance. And you can tell by going down on a 3 candle sequence, that one's not a gap. That one's not a gap. The wicks ran into it. So here's your 2 liquidity grab gaps so far. So if we clear, what I like to see too is if we clear this liquidity grab, it tends to retest it. She typically goes to the next liquidity grab. You may have a 24 to 32 S&P point run here coming up. All right. Any questions, let me know, guys. We're still holding above HVA. They grab liquidity again. Hold above HVA. But that's how you do the 5-minute opening range, liquidity grab, fair value buy. We'll keep going over on a week-to-week basis. You guys will get a good handle on it. All right, I'll be back in a few.